Well, for you silver and gold holders, these are the gold and silver holder right here, literally speaking. We're going to give you a little bit of, I can't predict what these guys are doing, but I had some revelations, basically some little bit of insight of what's going to be happening here in the future, because the next target is going to be people's retirements. I put a video out on this before, but let me get right back and repeat what I said in that video, just real briefly. With the actual equities, you're talking about the S&P and the Dow, where people have a lot of their retirement money wrapped up in. All historically, the Dow has basically moved within a couple percentage points of the real GDP growth and inflation. And that's exactly what it's done, right? It's not deviated much from that standard GDP plus inflation. But since the economic recovery from 2008 till now, we've only had a 22% growth rate in GDP and inflation, but I think it's 156 or 157% growth rate in the equities. So they're highly detached from reality. So I know like people are holding gold and silver here. They're like saying, "What the hell is going on?" It's almost like they're looking at a two realities or something. What's going on? There's two realities, and actually, in fact, there are two realities going on here. I know, like if you sold your silver now, that you would get the price that the market price is. I'm not making that point, but I'm telling you, the actual economy is really a reflection of what's going on in the commodities, the broad-based commodities, not just the silver prices, but the broad-based commodities. The only commodities that are really going up is, say, like beef and some of the livestock and agricultural products that have been affected by droughts. So, if you think it's like the zombie apocalypse, whatever you want to call it, it's coming up now or something like that. In a way, let me tell you this, though. This is one thing that is a reality, even though you're looking at these markets like, what the hell is going on here? And I know, like, once you predict, downward movement, everybody says it's going to keep going down. When things are going up, everybody says it's going to keep going up. And at one point in time, it's going to turn. Yes, that is a fact. It's easy to predict and just extend the line and say it's going to go down, because now I'm hearing oil prices are going down to $30 and stuff, and I'm like, yeah, sure. But actually, at this price below 65, that's hurting the shale oil industry. But depends on how long it happens. We got winter coming up. Winter hasn't been here yet. Winter's going to put a lot more demand on oil. If this is just a dip for a few weeks, that's what it is. It'll be memory, right? So anyway, just want to point out some other odd things out here, because while you're like fishing for a bottom, you may miss the bottom too. And that's why I always said you don't put all your money in silver. I know people have bought silver at much higher prices than they are now. I haven't really. Actually, my silver I bought a little bit higher than it is now. But the thing is, I never put all my money into one area. That's one thing I've always advised. But I just want to bring out something here that maybe you're not really seeing. And that is, I know why it went down today. Today it went down because of the Swiss referendum. They voted overwhelmingly 80% to 20% or something like that, or 78% to 22% against bringing up the reserves to 20% with gold. Now, I found that I didn't think they would pass, because I almost kind of felt like it was almost like the resolution for Scotland to get independence, We're in the twilight zone with voting. I think a lot of voting is rigged, but I didn't think it would be that lopsided, because they had polls prior to the actual vote, and sometimes it was leaning towards bringing up the gold reserves of Switzerland to 20%, and sometimes it was leaning against. And the gold price was radically reflecting, the movement was radically, in price of gold, was actually radically moving according to what the opinion polls were prior to this actual, the actual result. So the actual opinion polls were pretty close. Now the actual result I find very suspicious because I don't know. It's almost like Scotland losing its referendum to gain independence. I think most Scottish people wanted independence, but you know how the vote came out. But I did expect that it wouldn't get passed because I think in my mind, in the conspiratorial mind, the vote would have been rigged. It's too much. They got too much at stake. Now, the one thing I was pointing out, and here's what the devils are doing, okay? The devils with the red pants and a little symbol on his side and the high heels. I'm going to tell you right now what they're doing, though, is they got their eyes on people's retirement money. And like I said, these markets should be, in other words, I don't even know if it's even been any time. It actually hasn't been in any time where the markets have deviated so far away from market growth. General equities growth has never, ever deviated from the GDP plus inflation growth the way it has in recent years, since 2008. The recovery has been Fed financed. As a matter of fact, a 10% move on the S&P is $650 billion. What's on the Fed's balance sheet? $5 trillion. Like, in other words, that represents a 75% move in the S&P. If you're going by traditional methods where the Dow is closely correlates between the growth in GDP and now I'm bringing this up for a reason because I see this as a setup for people's retirement money where they're going to say it's going to be a bailout. In other words, like when General Motors went down and whatever, it became Government Motors and stuff. In other words, the next time we have a major financial crisis, it's going to make 2000, when Lehman Brothers went down and all that, it's going to make 2008 and 2009 look like nothing. And it's probably coming up pretty soon. I know George Soros is losing out on his bet pretty damn soon, or right about now, on part of his huge bearish bets, but 2/3 of it will. He's got a ways to go before he's got months left before the rest of it expires. So he's got quite a bit, still on that short position he's holding on, even though he's losing out probably about a third of that short position here coming up pretty soon, or about 30% of his short position. Doesn't mean he's going to lose out all the way. But when the markets come down, there's probably going to be something. What I'm seeing is that they're going to correct very hard. As a matter of fact, if we took the traditional way that the Dow would be measured against GDP growth and inflation growth, the Dow would be a little bit over 8,000. It wouldn't be over 17,000. See, in other words, there's never been a time when it's happened like that ever, because it's all Fed fueled. The Fed's balance sheet has been, the big question is how are they going to unwind the balance sheet? They can't unwind the balance sheet. If they unwind the balance sheet, they'll flood the market with, the equities, and it'll be the prices will plunge. They won't be able to shore the prices up. So, let me put it to you this way. It's almost like Alice in Wonderland and the rabbit, We're being led through a strange land here because the markets, what's really going on in the economy, where it's really being reflected, is in the commodities. Commodities, like a healthy economy will have a strong commodity demand. Now, tomorrow they're going to have, I think, the jobs market, the jobs report coming out, and we'll see what happens there. But the thing is, the commodities are a reflection of the real economy. In other words, the industry of America, the nuts and bolts of things that when people are actually producing goods and services, there'd be a lot more demand on commodities, even oil, because services require energy, even if it's not, for most services, that is. But, it's like that is like a very good indication of what it's actually going on. The underlying economy is very, very bad. But the stock markets are very good. And like I said, it's the first time ever I think in ever in U.S. history where they deviated so far away from GDP growth plus inflation by such a wide margin. I think it's 156% growth in the equities since the crash, with a 22% combined growth in GDP and inflation. In other words, the market should be a little over 8,000 instead of 17,000 on the Dow. So, while we're sitting here trying to, keep our composure about what's going on in the metals, I got to tell you, though, that when the equity, I think what's going to happen is when the equities crash, there's going to be a government bailout. It's going to be such a horrible thing, and this is where we're going to have the government basically taking over the retirement accounts. It may be. It may be. See, I think there's a method to the madness here. So, they're setting people up. They're fattening up the sheep for the slaughter, baby. That's what is happening. Now, of course, if you bought silver near the height of 50, you got fattened up for the slaughter, but you did not get slaughtered unless you sell. Well, of course, you'd be kicking yourself if you didn't buy it cheaper, but I never bought anything in that high. But the thing is, you will still recover all your money. Because if we give you a little example, when the markets were going down in the S&P and the Dow back in 2008 and 2009, actually early 2009, I think was the bottom. People were panicked and sold. But because there was predictions that it was going to go to, nobody really knew where the bottom was going to be exactly. But people panicked and sold. But if they would have stayed put for the next 3 years, they would have recovered all their money plus a great deal more. So that would be my advice to you on the metals. Don't sell off. I'm not telling you, I don't like put out videos like put all your money in silver. I don't do that stuff. I always said, but the thing is, I would still get more silver here and there if you just, it's almost like just get a little bit here and there, whatever the hell you want. And like money, you would probably blow on something else. And but don't put all your money in silver. I always argued, but it's almost like if you put all your money in silver at the exact bottom and you sold at the exact top, you're gonna make out like a fat rat. But that's never the reality of most people. That never is the reality. So the safest bet is to just allocate a little bit here and there. So, but if you got plenty of silver, even at these prices, that doesn't necessarily mean you got to keep adding more. But what I'm really telling you here is the real economy is actually not this Dow. Not this Dow. This Dow should be around 8,000, a little over 8,000. If we take the GDP plus the inflation rate from 2008 to now, we'd have 22% growth. We wouldn't be sitting around 17.8. What is really the economy is right here, because a healthy, robust economy has a lot of demands on crude oil. It's not just like oil. It's not just the precious metals. It's not just, but it's copper, it's aluminum, it's zinc, it's everything across the board. It's not even just the metals. The only place that's really a bright spot is beef, but that's not because of the healthiness of the economy. That's because of there's been such widespread droughts that even cattle ranchers have sold off all their beef. So and they're actually selling off their ranches. Actually, some of the most top billionaires in the world are fighting over this prime land in Texas because a lot of the cattle ranchers sold off all their beef. I guess because of the high prices and the drought and all that stuff. Now, the only metal that's looking good is palladium. Looking fairly good, not extremely good. This is one I've always advocated in every single video. You look back, I have multiple links on videos I did on palladium. For the last several years, I've been talking about this. I did put about as much money in palladium as silver. So, that's one reason I'm not even freaking, me personally, I thought that, it turned out to be a pretty smart move. But the thing is with palladium, the reason I think they can't move this market extremely hard is because the physical market, 43% of the supply comes from Russia. There's actually demand is outpacing supply, and it's a very, very tiny market. I think palladium actually is going to go more than the price of gold, and gold will break through the 2,000. It's going to break through all these ungodly numbers, and silver's going to take off like a rocket later on. But there's going to be some horrendous events that are going to make, this is preceding the market crash, because people realize, even all the people in the know, they realize what's going on in the commodities markets is actually a reflection of the underlying health of the economy. That's the reality behind it. So, we got a deception going on here. And like I said, the reason the markets are up, and I know people have been saying this, but people don't really grasp it all the way, because, it's like somebody says that it's artificially being held up, and people tell you that the silver's artificially being knocked down. But just look at all the commodities. They're all going down. And the reason is that's because the economy actually isn't healthy. But it's the first time that the markets have deviated greatly from the combined GDP. I'm going to have to repeat that several times, because that's a very, very important point. The market increase since the recovery has greatly deviated from the GDP and inflation index combined. And I'm going to just say this as a conspiracy theory. It's a setup, because what's going to happen, it's going to correct very hard, and it's probably going to require government intervention to fix the problems, because people are going to be going, oh my God, all my money, do something, And it's going to be a different type of bailout. The type of bailout is the government's going to probably own party retire is going to be one of the shareholders in your investment in your retirement funds. And I think this is all planned. There's a method to the madness. They're not stupid. So as a silver holder, you're kind of a little bit outside the loop on that. I know you didn't get the best price, because I think anybody now, they're upside down on silver. But I'm like upside down somewhat, a little bit on silver, but I'm way up on palladium still. But I think I'm the only voice that was pushing the palladium for umpteen years since I got on his channel, but nobody listened about that one. But I don't know. It was like I was whatever. But I'm glad I did that, because now I realize one's up, one's down. And actually, I'm not that down on his silver, but I'm not worried about it, because I realize that this is actually, we're experiencing extreme deflation, even though we got QE going on. And that's telling us the economy is extremely unhealthy. So I don't know what they're going to do in the future when it comes. Like I said, I think it's an orchestrated, contrived crisis that's going to be coming up. I did not expect the referendum to pass in Switzerland. I did expect it to be closer, though. I didn't expect it to pass, because I know it's not in the interest of the powers that be that Switzerland back more of its reserves with gold. But it's not in the interest of the powers that be that Scotland would gain its independence either. So, but anyway, just want to give you a little bit of a balanced perspective on this. Now, what I think though is when things turn around, it's gonna happen fast. I mean, if you look back historically, usually metals, when they take a really, really, really hard dip like that, it's kind of hard to say where the exact bottom is, but it spikes back up fast too. People are predicting $12 and $10 silver. I don't know. I really gonna tell you, man, because it's still a far jump from now, and well, it depends. I mean, how much you want to add. I mean, you don't need to go all in one area. I never advocated putting all your money in one area, but it's something that you should be doing a little bit more of, though, because if you don't have any, or you don't think you have enough, because when the markets correct in the Dow, there's going to be some severe repercussions where the government's going to wind up being a shareholder in a lot of these large investment houses, and they're going to have to take them over. You know what I mean? And that's going to provide some liquidity to keep the government doors open, because right now, if you realize how much the U.S. government is in debt, it's almost impossible to have it keep going like this forever, right? So I think there's a method to the madness. I think there's a method to the madness here, and it's not going to be, the reality is not going to continue where silver is going to be, and gold and all that stuff is going to be going down, 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 down. And actually, on the opposite side, it's going to go up more than it should. It might not be that long for it to do that. It could be a couple years from now. Totally different scenario. People will be thinking it's 20 years from now, but a couple years from now, totally different. It could be a totally different scenario. I always maintain that the Middle East war would be the one thing that would bring up price. Well, it would bring up the price of oil a lot. If there's Saudi refineries were taken offline, oil would go up ungodly amounts, way over $150 a barrel, over like really fast, and that would bring gold and silver up a lot, like astronomically quick. What's stopping all that from, what's actually dictating the policy in the Middle East, though, is Obama and Valerie Jarrett, who, Valerie was born in Iran, so born and raised there, so that has a lot to do with it. But that situation's not going to stay like that forever. And considering the number of things that have been going on around the Obama administration, you never really know how long this guy could survive in his office. It's difficult to say. It's difficult to say. It's all a matter of, enough different people get mad enough from different areas at Obama, and he's going to be out of office. That's what happens. So anyway, just want to throw a couple things out here from the other angles, because what we're seeing in the markets is not really it's not really like pure market forces going on here, because the other side of it is I'll just say it again, the commodities markets are really reflecting the true economy. There's no such if you look at the commodity prices, have been crashing like crazy while the Dow and the S&P have been going up. That's telling you that the economy, the S&P and the Dow going up, they all rise together basically, really, maybe not gold, but I'm talking about commodities, stuff you need in industry. If the economy's healthy and they're doing, they're making things, they're using energy to produce in manufacturing and things like that, there's more transportation going on, there's more exchange of retail goods and trucking and all that type of stuff. It'll create a demand for energy, and it'll create a demand for materials, including industrial metals that are wearing, dual hats that are both precious and industrial, like platinum, the white metals, the silver, platinum, and palladium. So, the gold might be somewhere else, and, that could be a different story. But if the economy actually is really healthy, all the metals would be going up together. And there's been a major, not on a daily basis, but when you're seeing a 3-year trend like this for so long, where they went in opposite directions, that's why it is. I'll just repeat it again. It's because of the Federal Reserve's balance sheet is $5 trillion. $650 billion move in the S&P represents 10% in the S&P. They've been adding to their portfolio and shoring up the price, shoring up the markets. They're shoring up the markets. Just like, if the Fed was buying silver or something like that, they can make the price, $2,000 an ounce if they were buying up silver and creating a shortage and causing the spot market to reflect the buyer's price. I mean, they can move anything any way they want. So it is artificial. The reality is the underlying economy is really closely related to the commodities. The commodities. So it's not going to last that long. And when it corrects, there's going to be, I think, a major government bailout of the financial institutions. And that's the devil at play, man. The devil at play. And it's going to be like, you know, Alice in Wonderland, man. I'm going to tell you right now, because people are going to be on a new reality. Because when that happens, basically the government is going to be managing your retirement accounts if you have your money in paper or electronic or managed by one of these large. I think this is what's going to happen. I think that's what they got up their sleeve. I don't know this for a fact, but it smells like it from like a lot of different ways. For the ways I already said several times over. Because why are the markets going up? It's the Fed. And what is the rhyme? What is the reason, the rationale for it? There's got to be an ultimate plan. When they come down, it's going to require government intervention, and the government is actually going to come in and own some of the largest financial institutions in the United States, or be a major shareholder in it, just like they did with General Motors or Government Motors. So, you with silver, swag on, swag on. So, you know, it looks bleak, but I don't want anybody to get too down in the dumps on this crap. I mean, I'm not. But I'm just telling you, I don't want people to be down in the dumps on this stuff, because the reality will change. And it's just like when people were panic selling in the S&P when it went down. The whole thing recovered, and it's the same thing that's going to happen with your metals. It will recover and make up, and you'll make money as long as you hold on.